Hey everybody, Boris. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar for December 19th through 23rd, the pre-Christmas week, when a lot of the price action is very likely going to be much more subdued. After a very, very powerful week for the dollar and the Fed surprising everybody with a much more hawkish tone than anybody thought, dollar basically blew out every range possibility against the yen, against the euro. The only one that held was pound, but pound, of course, is its own separate story. So the interesting thing here, I think, is going forward is we have a very quiet week. We don't have any material data. We have sort of final reading of the GDP on the U.S. side, IFO survey on German side, BOJ meeting on the dollar yen side, and just a smattering of very, very small data out of UK. It's basically a very, very quiet week because it's pre-holiday week and nobody ever releases anything. And at this point, the last two weeks of the year is when the currency markets generally have the quietest time of all. So barring any fresh news, which is unlikely at this point because I don't think there's going to be anything on the release side, either monetarily or fiscally, the dollar is vulnerable to, of course, a little bit of profit-taking pre-New Year. We've had massive, massive moves since the election, almost 1,000 point, no, more than 1,000 point move in the yen, a very, very strong move in the euro, and there's a lot of profit-taking on the books from a lot of currency hedge funds. So I wonder if there's going to be at least a possibility of some profit-taking on the books. Certainly, when you look at the technicals, there's clearly some evidence of overbought conditions and perhaps finally some retreat. But it's going to be mild. I mean, the dollar rally is still very much the dominant theme as we walk into 2017. The critical question is, in the next 2 weeks, are they going to be just simply possibilities for snapbacks? And I think there may be. Although they should be relatively limited because what was former resistance now becomes, or what was former support now becomes current resistance in a lot of these trades, and therefore any kind of moves against the dollar, I think, going to be very limited in nature. Looking at the ranges basically here, we see the euro. The support here is 103.50. Oops, I did an extra zero here. Let's fix that. 103.50, and resistance now is that 105.50, which was very hardcore support that we had going really for the last 3 or 4 weeks, that got broken like a twig after the FOMC meeting. Dollar yen is a very interesting story because this is really being driven by the melt up in U.S. rates, and U.S. rates now on the 10-year above the 260. The critical question is, if yields continue to express higher, there's no doubt that we could possibly touch 120. Dollar yen really could be a runaway train that could continue to the source of 120. If we have a correction in the yields, again, same kind of a thing, profit-taking end of the year, fixed income markets try to lock in their profits, then we certainly have potential for a move back very quickly down to 115. Remember, yen rides a escalator on the way up and an elevator on the way down. It tends to correct very fast. So there's very little doubt in my mind that anything could trigger a couple 100-point move in a matter of hours in the yen on the right conditions. And the pound, surviving this 23 support level so far, still surviving its upward channel move, but clearly getting much more frustrated here to the upside. Not much really news going on here. Everybody, of course, still waiting for the Brexit resolution coming up at the beginning of next year as far as the legal movements go. The negotiations with the European Union appear to be in a stall. The more interesting thing is going to be what the conditions in UK economy will be come the new year. I actually am not as bullish as some of the people are because I start to see, especially for example in manufacturing, a surprisingly weak performance that suggests that maybe a lot of the advantages of a lower pound have already been washed through the system, and now as UK has to compete on its own merits, it may find itself in much harder conditions, which could roll the pound over. So let's take a look at the charts here into this pre-holiday week and see what I mean about the potential profit taking. So for the euro, this area sub 104 is going to be key because if it gets tested again and supported, there's quite a serious possibility that we could have a short squeeze all the way out to the 105.50, possibly even towards the 106. This is the area of support that we've had really for the month of December and November. That got broken off the FOMC, and now we can try to trade back towards it in a more modest fashion. But certainly, to me, the euro right now is a very interesting fade move because the risk here is relatively small. I mean, 103.50 is pretty much how much I would risk, maybe down to 103 possibly. Maybe a way to trade this if you're sort of low risk, try to trade higher probability is a several entry position where you do maybe a third of a position here, a third of a position down if it comes down to 104, and a third of a position down if it comes down to 103 with the 103.50 with 10300 as the absolute ironclad stop, because at that point clearly things are going to be completely different. The dollar rally then just simply takes on a full momentum towards parity. I just don't think that we're going to see parity directly at this point. I think we trade back to 106 before we trade down to 103, and therefore tactical accumulation here for a short covering rally probably makes a lot of sense into into this week. Dollar yen, a little more different story. Although we have faded off the highs here. We could not hold the highs. Another day where we can't break fresh highs would suggest to me a potential for a move back down. The move back down takes us down to 115. Really, the true support is 113, and it's not at all inconceivable. I think this is what's going to shock a lot of yen bulls, is that we could see 117 to 113 in 2 days, and everybody will just go, wow, how did I lose so much money if you were long? The longs can get completely drawn out of this trade very quickly because the corrections in dollar yen tend to be very fast, generally as the rule. Overall, still very much a strong uptrend, so trying to catch a top here, quite difficult. But remember, we've had a pause here, pause here, pause here, usually 3 times is the charm. This third pause ahead of the 120, which is a very, very key resistance level, should be a trade that makes sense. And then pound dollar, still maintaining its upward channel because it's still maintaining its 23 handle, but much weaker. I mean, one of the interesting things here, and we'll take a look at this on the crosses, is I actually think that the relative strength of cable against the euro is going to reverse over the next couple of days. And the interesting trade here on the crosses is going to be to go long euro pound, because the pound just seems to have lost a lot of its upward momentum here, and the resistance here, we failed at 28, we failed at a lower high here, we're barely holding support here, and there could be potential here for further profit taking as the holiday season begins to approach. So overall, that's how the week shapes up. We're in a pre-holiday season, potential here for some profit taking, definitely going to be slower markets, and I would try to nibble at some attempts at an anti-dollar trade here as the year comes to a close. Wish you guys the best luck, the best trading. Boris, over and out.